Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday evening, October 8th, 2020. Now remember, tomorrow, sometimes I put out my Friday evening stuff much later. It could go even to a Saturday or Sunday. And I'm talking these wrap-ups. Obviously, I put out all my subscriber videos right when they should be out so that my paying subscribers get what they want through there. All right, let's talk about what we've got. We have the name calling getting even further apart, going. You know, you would think today, if you're watching the market action in financials, that we're getting closer to a relief deal. Yet I'm watching late in the afternoon, Miss Pelosi, I think it was a Bloomberg interview if I was right, and she's calling a committee together to study the 25th Amendment to see if they can remove President Trump. Now this is what, 27 days or so before the election, and they're still on this road. I don't get it. How are you going to get a package done? Because these two will never get in a room together. That isn't going to happen. So it's all up to Mr. Mnuchin and her to see if they can conquer anything. Obviously, the president's trying to break things out by the piecemeal. She said yesterday she believes that they should do a relief package for the airlines. And then today, in all fairness, she said no. She needs to have more things to it. It should be a bigger package. If you're trying to trade this, I wish you the best, because don't rely on that. You got to be a chartist at this point. And with that in mind, the exchange tonight, the CME group, started raising margins all over the place. So I saw financials in the stock indices go up, a bunch of currency margins going up. And I told you, different clearing firms, including mine, Wedbush Futures, they're going to go up on margins starting on the 12th. They're going to throw kickers. The volatility is coming. For those of you that like the volatility, you're going to want to go to our website under free offers. Take a look at the CME Group's offering, the brochure that we have, 25 proof and option strategies, maybe something you're interested in. So I've given you what the gist of everything is. Now let's go take a look at the chart action. And I'm impressed. We're up 112 points on the weekly chart. This was what I was waiting for. Remember, I told you here was last week. This is this week. I want it to be over that low. If you're over that low, then I think you've ended this run to the downside and you're trying your upside. That's exactly what I said during the week. I've said it each day here, and I'm getting the action that I want to make that statement. I thought I'd draw for you this inverted head and shoulder because we talked about it. A shoulder, another shoulder, the head, and then in the light color here, the neckline. Okay, so you could actually say the neck, I guess, here, and the bottom of the shoulder. It depends which way you want to talk about it, but there's different ways the chartists will mention it because it's inverted. The key to me is right here. I told you if the market could break away from that, you're liable for no reason that you understand to just start lifting away. And I'm going to tell you what this count is if it stays valid. It's 3650, right in that area there. So it is something to pay attention to if the market's going to keep going. Again, it's a chart pattern, something to watch, and you've got to watch what you've got through here, and we'll see how the market comes in right over that number, which it's doing right now. Early going, traders that pay attention to those inverted head and shoulder think it's a breakout. If you take a look at the swing line, it's been in a bullish posture, higher lows and higher highs. If you look at the 18-day average, prior to all this, you fought a battle. How many times? Just kept hitting it over and over. The stop had to be under that low, and you're wondering, will it get the momentum to go? And it has now had the beginning of it, right? What about the Bollinger Band? You're right into it. I was looking for this market to hit it. Now, for those of you that pay attention to what I teach, you have an outside day down. If you take out the high of an outside day down, the odds are super strong that you're going to go to the closest upper moving average. All the key averages are under the market, or the Bollinger Band. Does it have to? Nothing has to do anything. However, go back and do your own analysis. You will see what I discovered with this. So this is an interesting ploy that the market gets up here. The upper Bollinger Band, was it hit today? I don't think it was. 34.47 was the high. You missed the upper Bollinger Band by a tick. a full handle, you're knocking on the door. I wouldn't be surprised to hit it, but you're getting the point, right? Momentum, overbought. I have an overbought market running at the upper Bollinger Band, taking out from 2 days ago the high of an outside day down. I lay that as a bear trap, and I have an inverted head and shoulder. Those are friendly terms to me. In the NASDAQ, I don't have the same thing, but I have the other key. This is an outside day down. Momentum turning down, you're thinking, oh, it's a failure. You've heard me say it here over and over. If you take out the high of an outside day down within 2 bars, I use the word bars. It could be on a 15-minute chart, a 1 hour. There's different types of traders out there. But if you do that, it's often a sign that you've laid a trap, you've sprung it, and the market's going to try to make a run for the closest moving average above the market, the main one, or a Bollinger Band. You're wrong if you get back under that low. Okay, so I'll see if it works itself out. The Dow's, same thing, identical chart pattern. You had your outside day down right here. The market comes back, and you can see what it's doing. This market went right up, if I'm correct, 28,452, and 28,458 is the number. Whether it does it or not, I think within 6 points and calling, that's not a bad little call. The Russell, whole different world, just riding the upper Bollinger Band higher. Overbought as can be, but trying to embed. It's going to need more time to do that. If you stay on a Bollinger Band and you embed, it's a son of a gun. Markets tend to move then higher than you think until that reading on the slow stochastic is lost. In the VIX, you've gone from the upper Bollinger Band, making your run now at the lower band. You hit it today. 2488 low, 2490 the lower band. So that's what you're doing. This is called a pipe. You're in the sideways action. But more important, what actually happened here is we kept going up in the VIX as the stock market was rallying. And I kept mentioning, there was divergence. Are the pros buying a lot of insurance for their portfolios? And that's what I think's been going on. And now as the market's starting to drop away, is that a sign it's all green for the stock market to go higher? It's confusing, admittedly, but I'm wondering about that. In the bond market, we had how many days under the lower Bollinger Band? And what I said is you had, I think coming in today, a 2% chance of staying under it. You had 3 days in a row over. There you are. You're moving back over it. You haven't changed the trend. You've just moved to the right-hand side. The trend is still down. The market's still riding that band. This is right in the face of what people think. People think that interest rates are going to stay down. The Fed's got the markets back. But we're seeing the curve yield, all parts of it, that are doing what? Continuing to drop away on us. And here, too. All you did is after 3 days under this, move to the right-hand side. It's exactly what I was telling you that I thought would happen. Now the question is, can the dollar do anything here? The dollar has a pattern of lower highs, lower lows, but it's also gone flat on you, right against the 18-day average. If you can take out 93.37, then I think the bears will ask themselves, can we make a run to this lower number? If you take out 93.97.5, let's call it 93.98 you hit, you reverse this pattern, get bullish, and then the question is, you're going to 94.74. Why would you go up if we're going to do things to kick the stock market higher? It's a confusing time, but the chart action is bearish here, and if it's bearish there, it's likely bullish in the euro, which it is. Remember, the euro makes up 55% weighting of the dollar index. So understand that weighting, it's important. The euro tonight's up a little bit. The pattern is higher lows, higher highs. It has managed to stay over the 18-day average. Momentum is up until the market takes out 117.41.5. The bulls have control. The question is, can they get anything going and get up to the upper Bollinger Band with it? In the Japanese yen, I saw the margins go up, by the way, on the yen, the euro today, the Swiss franc, the Mexican peso, the Canadian dollar. There's a number of markets, and New Zealand dollar and the Aussie dollar. The exchange raised margins. I got the notice just before I came on here. Lower highs, lower lows. Are you going to hit the lower Bollinger Band and challenge the combination of the 100-day average in that number? Are we embedding? We're trying today. If it stays down, you embed, and then I'm still looking for that number. Bitcoin broke out to the upside. So here's what we looked like right at this point yesterday. We had a pattern of lower highs, lower low. If you took out this number, you could end up with higher lows if you don't take out yesterday's low and a higher high, just what you did. That puts into play the upper Bollinger Band. You're just whipping back and forth and you're very overbought. This to me is now trading in this Bollinger Band cycle where you get whipped back and forth. The differential between the Brent and WTI hasn't changed, but Saudi Arabia came out today and said they are seriously thinking of not putting another 2 million barrels of oil back on the market in January a day. That's a big change. Remember, their budget is calling for $50 a barrel. You're nowhere near it in these markets. Here's Brent, and you're trading at 43.38. So you need to get the market up 15 more percent, 20% to get it going. Adding more fuel to the fire won't do it. So I am not surprised to see that they're already saying that at this point. Remember, we still have the COVID. We don't know how bad it's going to get through the fall into the winter, and they're putting out the feeler on that. Very interesting statement, and it certainly lifted the markets during the day. Coming in, you had higher highs, and this is the pattern coming in today. You had higher highs, but a lower low. This was the number to look at, 42.84. You took it out. Now you got the higher lows, higher highs. Can you reach up to the upper Bollinger Band? The Saudis will be smiling if that occurs. You get a bad trade if you get under 41.36. You're getting now into the area where you're overbought as well. So I don't know that you're going to get new money chasing that. What I will be watching, though, is in our energy, are we going to get a bullish crossover where the 18-day average wants to get back over the 100? That will catch somebody's attention. We're not there at this point. Notice when the 100 got back over the 18, the market went into a funk to the downside. Now it's trying to come up. It is very overbought, but in an uptrend. Target is 42.39, supports the combination of those numbers, but a bad trade would be anything under 39.57. Gasoline, as far as I'm concerned, hit its upside target, overbought. I'd rather see what it does next, but it's already been there, done that. And obviously, we're all going to be watching what happens tomorrow as Hurricane Delta comes in. It's a Category 3 storm right now. It's going right back, unfortunately, to Lake Charles. My heart goes out to those people. If you've seen aerial photos, there's no roofs. They have tarps. They're not going to make it with a tarps and 105, 115 degree mile per hour storm and a lot of rain. You feel bad. You know, you talk about this, you got to feel it. You're staying under this number. You're fighting a battle again at the 18-day average of closes. 4/5 of all the oil we produce in the Gulf of Mexico has been shut down, and you can imagine the natural gas has been shut down. So now the question is this market trying to get itself, number one, back in balance? You can see why you're getting the rally in the energies because of the storm, but this is fighting a battle right there. You know, what I like to do is teach. You know that. And one of the things I do is I use this particular program. This is my phone that you see right through here. And on my phone there, you can get quotes the way you want them. Look at how big I made them. I helped design this. And I want to be able to see them. But this will also talk to you. So it'll repeat orally all your quotes, your quote file. You can say, bring up my S&P chart, it will bring it up for you. Bring up the weather page, it'll bring up the weather. Bring up news, bring up Ira's videos. It's all there. If you haven't tried it, I think you want to go to our website at www.iraepstein.com. You'll see in our free offers, it's right there. Give yourself a try with it. It costs you nothing. We'll put it in your hands. You see if you like it. And by the way, if you have an account, you'll buy my subscriptions. You get this absolutely free. So there's nothing there. And it's everything. It's the government reports, my videos, David Hightower blasts through this during the day, all of our oral commentary through the day. And you don't have to leave it on for that. You can go into the media and play whatever you want. It's all done by categories for you. I'm Ira Epstein. You have a great day. See you tomorrow.